So, what you're telling me is that the music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism.
Hello and welcome back to the channel. As the 10-year yield climbing higher, we saw a historical sell-off in the Nasdaq, hitting the high growth and expensive software kind of names. So who is selling off these names? The answer is the hedge funds, aka smart money. Obviously, they are moving their holding from high growth and expensive software stocks elsewhere. In the other hand, who is buying in? The simple answer is the retail investor. The retail investor buying the dip in beating down high growth names such as GameStop and AMC. So if we take a look at the numbers, individual investors have remained active in the market in 2022, buying a net of 3.9 billion of US stocks and exchange traded fund in the first 3 days of the year. Data from the vendor research. What's that mean? It means that retail investors are holding bags worth of 3.9 billion dollars, a pie in the face, because you and I know that the center rally was a trap, as I showed before in previous videos. For examples, the ones who were participating in buying Apple follow the 3 trillion market cap, they got whacked. In consequences, we see that the retail investors are the ones always holding the bags and laying on the bent barrel. Let's dive a bit more deeper. Last year, the Fed was injecting billions and billions of dollars in the stock market because of the virus impact on the economy. But now, the Fed are raising rate and drying out the market from liquidity, even though the number of infections still at a high level. The answer is in the bottom line of each individual investor. What about the historical wealth transfer from whom to whom? With that being said, let's move to the market coverage. Let's start with the market performance. The Dow Jones is down 170 points, or a decline of 0.47%. The Nasdaq is down 19.31 point, or a decline by 0.13%. The S&P 500 is down by 4.53 points, or a decline of 10%. Let's move on to the heat map. With technology, we see Microsoft down 0.79%, Apple down 1.67%, keep on tracking lower and lower, Apple, after reaching their historical market cap of 3 trillion, as I explained in the introduction. Communication service with Facebook up 2.56%. Consumer cyclical with Amazon down 0.67%. Tesla whacked to minus 2.15%. And from this market board, we see two sectors that they are showing some improvement, financial and energy. And I think this is the new way of hedge funds and smart money to funnel in money. No, the financial is good in high interest environment, and the energy is good location when we have a higher inflation. Let's continue with the futures. We see that the energy is on the green side, outperforming. Brent oil is $82.57 for a barrel. Natural gas still on the high side. For the soft, coca is down, orange juice is down, and lumber is climbing higher. For the material, we see that copper little bit on the green side, the gold on the flat line, and silver is to the down. Grain, soybean, soy meal, wheat, oats are on the downside, and a little bit of gains for rough rice. Let's move to the chart analysis with the SPY 30-minute time frame. We saw after the fact we crossed the support of 470, it became a resistance. The SPY tried to break on 2 times to break through this the resistance. He couldn't go through, and the crossing on the MACD is indicating the buyers are coming in, and we see that on the RSI we are on the overbought area, confirmed with this big volume candle. So maybe we will expect tomorrow some consolidation and and short covering. We will see how this will play out, but at the moment I think that we will have some consolidation, maybe reaching one more time the resistance of 470, and from there we will decide how we go. If the bulls will take over, we will see the chart blasting higher. If the bear still in control, we will see a downward move. Let's go to the Qs. For the Qs, we see that we have a bear flag, and I think that the bear flag will play to the downside. The RSI and is on overbought territory. The MACD is crossing, but it's flattening on the top, so I think that we will resume the pain on the Nasdaq. IWM for the small caps. After this big sell-off, we see that we have a bull flag formation with a sell-off at the end of the session. Things doesn't look good for the IWM, and I expect, as it's the last day of this trading week, Friday, nothing extraordinary will happen in the IWM, and we will be sideways for a while. Let's take a look at the VIX, and let's move to the 4-hour time frame. The VIX popped up. Let's see. Let's measure this spike of the VIX by 27%, and now the VIX is cooling down. So that's for the VIX. check the MACD. The MACD is crossing and topping, and that's an indication that if it's topping, that it will cool down and will come back to lower levels. The dollar index, let's change to the daily time frame for the dollar index. We see that the dollar index is creating a bull flag, so that means maybe we'll see another leg higher on Monday. Gold, after it was rejected at the 1834 level, it went all the way down to 1790. I think for the gold it will be in consolidation for some times until we will see a move in the 10-year yield. If the 10-year yield will blast higher, more pain for gold, and the gold price will go lower. If the 10-year yield will go lower, that means the gold can blast a bit higher, unless the concept of thinking about gold and the sentiment in market will change, and then people, they will be thinking about gold as to save value and to fight inflation. Let's check some individual stocks. Apple continue flushing down, creating the beginning of the creation of a pattern of head and shoulders. See here the first shoulder, the head, and let's put a neckline about this area, 167, so it will be our target. So we'll expect that Apple will go down until it reach the 167 resistance, and then will blast higher or crawl even to a lower positions. Tesla doesn't look good, even though at the last 30 minutes of the yesterday trading, we saw that the bulls step in and start pushing the stock higher. We have a lot of gaps down below. We have a resistance. The MACD is crossing. That's indicator that maybe we will have more pain to come in Tesla. Let's continue and check AMC. AMC doesn't look good at all. At a point, the stock was trading at $20. As I said, if the apes want to keep the short squeeze in play, they must both buy the stock and stampede buying call options to push the stock back higher. Other than that, if the sell-off if the sell-off is persistent on AMC, that means there will be more pain to come, and the idea or the hope for a short squeeze will be less and less probable. Let's take a look at Cathie Wood ARK Invest. Well, as we see here, a huge drop down from the highs that were reached in November. a massive drop down by 52%. This is a confirmation for what we were speaking about in the introduction, that high growth names and the expensive software names, they will downperform this 2022 market. Finally, what we get on our economic calendar, we got the non-farm payroll. The non-farm payroll is an important number as it impacts directly the 10 years yield, and we know the impact of the 10 years yield on the performance of the stock market in general. So it's a very important indicator. We have the unemployment rate. We have also the average hourly earning. We have other Fed chairmen speaking, San Francisco Mary Daly and Atlanta Fed President Raphael Boistek, and finally the consumer credit. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.